All right, Mitch. So you have been tweeting a lot recently that hodling is not a financial plan. What do you mean by this?
Start mining Bitcoin today at marketplace.blockwaresolutions.com.
Yeah, so it just seems that most Bitcoiners, in my experience, have a misconception, I would say, that just simply buying and holding Bitcoin solves all of their financial problems, answers that's the answer to all of their financial questions or circumstances. And I just think that is very short sighted. To be honest, I think there's a lot of blind spots in people who approach planning for their financial future in that way. Because, at least at this point in time, like, Bitcoin hasn't made financial advisors obsolete. Whether that happens or not, I don't think it will entirely. There is definitely a large chunk of the financial industry that Bitcoin would wipe out or make obsolete if we went to a Bitcoin standard, in the US. But at this point in time, I mean, it really just changes the way that we approach and think through financial planning topics, like retirement planning, estate planning, inheritance planning, taxes, insurance, cash flow, planning for goals, like all of these things that we have to consider, whether we own traditional financial assets or we own Bitcoin, we still have to consider right now for someone who holds a significant amount of Bitcoin. I would even argue that we have a lot more considerations, with self custody and and other aspects. And so at the end of the day, like when you really boil it down, financial planning is tying your financial assets with your life, who you are, and the outcomes that you want to achieve for yourself and your family. And so that really will never go away. There will be those financial principles that we will still apply, even if, we reach this Bitcoin standard world where it really changes a lot of the investment space as we see it right now. And so I think it's very short-sighted, and you're doing yourself a disservice if you say, oh, just buying as much Bitcoin as possible, putting it into, cold storage, and then holding for the next 100 years and passing it to my kids. And that's really all the extent of how I think through this. I think you're doing yourself and your family a major disservice by ignoring all of these other areas that I just mentioned. So, we can dive into those, specific factors deeper, but that's really what I mean by saying, hodling is not a financial plan.
Yeah, I tend to agree, and maybe almost hypocritically, because I certainly approached Bitcoin when I first figured it out. I took that approach, like, all right, forget everything I know, buy and hold, buy and hold, buy and hold. And to an extent, I still kind of appeal to that ethos, and mostly through a sense of getting people off of zero, right? When you come to Bitcoin, it could be a very daunting task, thinking of, all right, getting my coins off the exchange into single sig, into multi-sig, into collaborative custody, and to figure out your inheritance. Like, there's so many different steps. So I understand this sentiment of like, hey, don't worry about, there's a lot of complicated things, just buy and hold Bitcoin.
Yeah.
I get that as a step zero or a step one, but once you've done that, all right, now there's a lot more layers you need to start unpacking. There's more things you need to do to go from, hey, I bought and hold Bitcoin, and I want to pass this to my grandchildren, to my grandchildren's grandchildren. There's a lot of steps there in between. And I definitely agree with you. Like, if you're not thinking about these plans, if you're not thinking about it deeper, then you're definitely doing yourself and your inheritors a disservice.
Yeah, absolutely. And, for you being a young guy, young single guy, don't really have a lot of financial variability or situations popping up, maybe that is all that you need for right now. But when you get married, you have kids, maybe you start your own business or you get equity in the place you're working for, and, you start getting a lot more financial complexity. That's where, this stuff really must come into play. And honestly, I think this probably speaks to a bigger misconception with the financial advisory space in general. There are the asset managers, I'll say, or investment managers that, they will take a client's money, they'll charge 1% and put them into the S&P 500, maybe the total bond market index or something like that. And that's the extent of the service they provide. But with us, we're really looking at everything holistically. We're not just putting people into index funds and saying, oh, yeah, okay, our job is done. That's all you need. You're good. Like I said, we're looking at all of these other areas and how they tie together and how they actually connect the dots between where you are now and where you want to go. And so, there is a subsection of the financial industry that's what they do. And I wish it didn't exist just as much as everyone else, because they're doing more damage than they are doing good. But, with financial planners like myself, and others, we're really taking it to that deeper level, and it's very, very beneficial, even in the intangible aspects of our lives, having more peace of mind, having clarity on what to do, just being able to sleep better at night, knowing, if something were to happen to me tomorrow, my kids are going to be taken care of. I know I'm on track to be able to pay for their college if that's what I want to do, or fund the start of their business, or, whatever it may be, give a large donation to my church and still be able to retire and live comfortably. Whatever your goals are and the factors are, there is an intangible aspect to the service that we provide as well, outside just the spreadsheet and the numbers.
Yeah, that makes a lot of sense. How much of quote unquote traditional financial wisdom do you think is still applicable? Kind of ideas like diversification, 60-40 portfolio, mutual fund, staying debt free. How much of that do you think is still relevant, and versus like this sort of Bitcoiner ethos, which is just hold your own keys, buy and accumulate as much Bitcoin as possible. Don't diversify, like even accumulate fiat debt, right? Because Bitcoiners, we understand that fiat money loses value. So having fiat denominated debt can actually be a good thing. Where do you sort of see this balance between like Bitcoiner financial planning, I guess you could say it, and sort of traditional Dave Ramsey style investing?
Yeah. I mean, the important word that you used was balance. And I think we have to find that, and it's different for everybody. The idea that balance looks the same for everyone is out the window. I listen to a lot of Alex Hormozy podcasts, just business podcasts in general. And he was saying, some seasons your balance will look like working 7 days a week, 12 hours a day, just because that's what you need to do to get the job done. And so anyways, tying that back to, all of these traditional financial principles, like diversification, for example, when most, I'll say fiat financial advisors refer to diversification, they're talking about, okay, we've got, an index fund that holds 500 companies, S&P 500, that's diversified. Maybe we have 20% of our portfolio in international equities, and maybe we have 10% of our portfolio in, total bond market index or something. And they feel like they are well diversified. That's what they would call it. But in reality, it's not, because the correlation to the S&P 500 or the overall US stock market is usually still close to 1, if not 1, meaning they move hand in hand. So you're really not diversified at all. What diversification means is owning a portfolio that actually has uncorrelated assets. So, when one of your assets is up, maybe another asset class is down. That's what diversification really is. And that's ultimately, what Bitcoin can provide in a portfolio, is that uncorrelation to these other assets or other asset classes, along with, gold, commodities, other things that we hold in our client portfolios. And so I think the traditional view of diversification is very misguided and misunderstood. And we take a real, true diversification approach to our asset allocation with clients. With that being said, we work with clients who are 100% allocated to Bitcoin. That's all they own. And some who, would rather just hold 20%, Bitcoin. And that's usually the lowest allocation that, a client would have of ours. So it's dependent on the person for sure, and we can get into the allocation, more specifically. And so, diversification, it depends on the person. And I think the way that most financial advisors look at it is completely wrong anyways. Some other aspects, you mentioned debt, for example, like, borrowing a money that is decreasing in value over time to buy an asset that is increasing in value over time is, a good financial strategy. It depends on to what extent and in what situation does it actually make sense. And so it's not an all or nothing, which is really I think the approach that we take in general to all of this stuff is, let's find the right mix of, whatever strategy it might be that is actually good for you and your situation. It may not be the most optimized, thing to do on the spreadsheet, but again, we're not living in a spreadsheet world. We're trying to help our clients achieve the life that they want. And so sometimes we just have to zoom out, understand that we're trying to help the client tie their financial assets to the outcomes that they want to achieve and take the best route to get there. So, it's a more nuanced approach, I would say, that we take. And we can dive into any one specific, aspect if you want.
Yeah. Well, I really like this point you bring up about diversification, because it doesn't matter really how diversified your portfolio was in March of 2020. All assets went down, right? You weren't protected from anything there. And I think what we've seen over the last few years macro wise is there's kind of just one trade, right? It's global liquidity. Is it going to expand or is it going to contract? And every asset moves accordingly. So having a diversified holdings of all things that are tied to global liquidity doesn't really do you any good, right? And so to me, that makes Bitcoin shine the brightest, right? Because it is the thing that is most tied to global liquidity. So with global liquidity designed to increase over time, why not just hold Bitcoin? Do you have like a certain, because you mentioned some clients, they have, low bar 20% Bitcoin allocation, some as much as 100%. Do you have a certain rule of thumb that you like to follow? I imagine a lot of, the target allocation is very age dependent. What's kind of your general principle there? And I know it's going to be different for every case, but is there a rule of thumb you would have?
Yeah. So just to speak to your last point before I move on to that, I mean, that is essentially our investment philosophy in a nutshell. Is all assets are beta to monetary policy, or monetary inflation is what we would like to say, or global liquidity. You can plug in whatever you want there. And so when we're looking at diversification, we're honestly thinking of it from the aspect of what assets or asset classes are going to benefit most from new liquidity coming into the system. We know that they have to continue to expand the money supply or it collapses in on itself. And so, we look at the asset classes and see their sensitivity to the money supply. And with a long-term investing approach, we can afford to ride the volatility along the way. You mentioned March of 2020. That was the fastest market crash in history, but also the fastest rebound because they turned on the money printers. They don't let things fail anymore. And so we just really have to make sure that we own the right assets that will actually outpace monetary inflation, help us grow our wealth over time. And so, it's Bitcoin. Is it 100% Bitcoin? Maybe for somebody, but we also can look at, tech stocks or just high margin companies that can afford to ride these liquidity cycles and take advantage of cheap money, or other hard assets like gold, like real estate, like commodities, in a portfolio. And so I would say that's more our approach to diversification because of the underlying view of our financial system that most, fiat financial advisors just don't have. And to speak to this Bitcoin allocation, we're comfortable if someone wants to be at 100%, at 20%. The answer can't be 0%. I think we're all on the same page there, at least in the Bitcoin world. But the big point that I try to, and we try to make with our clients, no matter where they come in standing with their Bitcoin allocation, is do you understand the do you understand the decision that you're making? Are you making this decision intentionally, knowing full well the potential outcomes that could happen? So, for example, someone who is 100% Bitcoin, we just have to be honest. Let's zoom out for a second. Yeah, we see the asset that Bitcoin is. Yes, it's the greatest asset that's ever been discovered. Yes, we feel this kind of anxiety that we want to accumulate as much as possible. But at the end of the day, again, when we just zoom out and we realize that Bitcoin is not the end, it's actually a means to an end. And the ultimate end that we're trying to achieve is the life outcomes, the goals that you want to achieve for your family, for your community, for your loved ones. And so is 100% Bitcoin allocation right for that? For someone like you who's deep in the industry, has a lot of understanding of what Bitcoin is, if you're willing to live with the fact that maybe this doesn't play out like we all think it can, maybe Bitcoin does go to zero, is that very likely? Absolutely not. I think it's more likely that Bitcoin could take longer to reach, the values that we expect, that then we can go ahead and retire and be the wealthiest, in the world, or whatever it may be, whatever we want to say. But as long as we're making an intentional decision and willing to live with the opportunity cost of that decision, then I think it's okay. If that's 50% and we're like, okay, if we run the numbers for a client and we're like, here's the potential outcomes on Bitcoin based on what we see, previous, adoption, performance, all of these different numbers. And then here's, your future net worth or portfolio value based on the 50%, other assets. And we just run that at different allocations, those projections into the future, and say, if you're comfortable with these scenarios, then we are comfortable with you having 100%, Bitcoin allocation. If you're not comfortable with those scenarios, let's say Bitcoin doesn't play out like we think, maybe 50% is better. If Bitcoin somehow goes to zero, maybe the other, 50% of your portfolio or your wealth can still achieve the goals and the outcomes, again, that you want for you and your family. And so there really is no rule of thumb. I'll say at a minimum, we typically go straight to 20% allocation. But at this point in our firm, we are bringing on Bitcoiners as clients. And as you know, Bitcoiners won't sit at 20% for very long. We have people, we have most of our clients coming in anywhere from 60 to 100%, Bitcoin allocation. And so they need a advisor that understands Bitcoin at a deep level and can speak to these other financial planning topics and help them navigate their potential future based on however much they own.
Yeah, that makes sense. If I were in your shoes, I wouldn't be taking any non-Bitcoin clients either, because quite frankly, like you probably don't want to be spending a lot of your time having to educate people from the beginning and trying to haggle them to just get a small allocation into Bitcoin. Right. You just said, I really like the way you said this. Bitcoin is not the end; it is a means to an end, which would be to increase the quality of your life, right? Because money is sort of this tangible way to store your time and energy, right? We work and we labor to receive money, and we hope that can store our efforts today through time, and then you can trade it in the future for goods and services, which inherently kind of means selling or spending your Bitcoin. And as we approach this bull market, I think that's something that's going to be on the front of people's minds over the next 12 to 18 months or so. How do you approach this idea of spending your Bitcoin and sort of quote unquote taking profits? Do you think, maybe DCAing out of your position, selling a little bit of Bitcoin every week? Like, what's the most kind of prudent way to go about this? And also sort of keeping the tax question in mind as well.
Yeah, good question. So again, we have to tie this back to our financial circumstances, where we are. If it is someone who, we just finished up a project-based plan for a client not too long ago. I think it was actually beginning of this year. He was looking to retire early on 100% Bitcoin allocation. And, we had to really talk with him about, okay, if let's say you retire, this bull market doesn't play out, or maybe you get to the top of the bull market and you decide to retire, and then you have to start selling your Bitcoin to live off of it. And we have an 80% drawdown. Now your, $80,000 you're spending every year is a lot more Bitcoin than it was just 12 months ago. So we need to start thinking about, okay, that what we would call that in traditional financial planning is sequence of return risk, meaning that, okay, in the early years of retirement, if we get very bad returns and we're taking a large chunk of out of our portfolio to spend it, it could put our long-term goals at risk. And so if it's someone in that situation, maybe they do want to take gains off the table. And ultimately that is what we recommended. With, after talking and getting to know him, it was like, okay, based on these different price targets, let's go ahead and take years worth of expenses off the table for you. So that, okay, right. We see this kind of 4-year cycle playing out in Bitcoin right now. Whether or not that will continue to play out over the years, who knows? But, if we get to, $150,000 Bitcoin, okay, let's go ahead and take 50, 100, maybe $150,000 worth off the table. And that's 3 years worth of this guy's expenses. So then we can ride out whatever happens, in the next short term and hopefully get to the next bull market where we take, another few years worth of expenses off the table. And that was the ultimate strategy that we decided to go with. And he was happy with that. It's tough for people to think about selling their Bitcoin, but again, Bitcoin is the means to an end. Wealth at the end of the day, money at the end of the day is the tool to live the life we want. So we need to make sure that, we're not so far down the rabbit hole that we're so close to the Bitcoin picture that we can't zoom out and really remember what our true priorities are, in this life. So it all comes down to circumstances as far as how we approach selling, not selling. If it's someone who's still accumulating wealth, they don't need it anytime soon. No, we're not thinking about selling ever. And that's the case for a lot of our clients. We have a couple clients who own a very, very significant amount of Bitcoin. And so they are thinking about, okay, how do I get Bitcoin out of my estate to pass it to my grandchildren the most tax efficiently that we can? We're thinking of strategies to make sure that the Bitcoin is never sold, at least not for multiple generations. And so it all comes down to the circumstances and the goals, again, that you want to achieve, whether or not we're going to sell, not going to sell. But I would say fundamentally, our approach is not trading Bitcoin at all. We're not thinking about it in a silo as far as investment returns and trying to time the market with Bitcoin. We're thinking about it. Do we need to sell to achieve XYZ life goals and circumstances that you have right now?
Yeah, that makes sense. And I like this approach of viewing it through kind of 4-year cycle timeframes, right? If you are 100% Bitcoin and you want to stop working, right? So that means your income's going to zero. Essentially, you're going to be drawing off the stack instead of adding to it. Well, why don't you put aside enough to cover your expenses for the next 4 years, and then if Bitcoin keeps playing out like it has historically, then 4 years from now, your kind of base there is going to grow in purchasing power. You'll be able to take a little bit more off without really eating into your total Bitcoin stash too much. What is the optimal approach when it comes to estate planning and passing your Bitcoin on to inheritors? Is it time locking? Is it collaborative multi-sig? Is it a trust? What do you kind of think about that whole idea?
Yeah, absolutely. So, there's really two different things that you mentioned there: the trust and then the custody setup. Those are really the two factors that we have to think of. We're thinking of how do we legally pass the Bitcoin, and then how do we make sure that our heirs actually get possession of the Bitcoin. There's really those two different factors that we have to take into account. And so I think at a fundamental level, most Bitcoiners don't realize that by default, your Bitcoin will go through probate if you do not have a trust in place and the trust is not the owner of the Bitcoin. Does that mean you're giving up custody or control over your Bitcoin? No, not necessarily. With certain types of trusts, you may have to, but at a fundamental level, if you just have a will or you don't have anything and you pass today, that judge is going to announce to the world publicly, this is how much Bitcoin you own. Here's who it's going to go to. And I don't think any Bitcoiners, any true Bitcoiners, I'll say, want that to happen. And so the first step is just making sure that we can avoid probate, not have that happen, maintain our privacy, and legally pass the Bitcoin to the people that we want to without it becoming public to the entire world. And so you do that first by setting up a revocable living trust, and then you have the Bitcoin owned by the trust. You can still hold it in cold storage, single sig, multi-sig. You could even have the collaborative custody set up. Our thoughts on custody, it really just depends on the client situation and the outcomes that they want to achieve. But at a very again, that fundamental level, we want to make sure that we get it out of probate so that we're not publicly announcing this, how much it is and who it's going to. As you get into more higher net worth, Bitcoiners, let's say, you're owning $2, $3, $4 million worth of Bitcoin, then we need to start thinking about other estate planning strategies to avoid estate taxes. So back in 2017, Trump put into place the Tax Cut and Jobs Act, which basically doubled the estate tax exemption allowing, I think right now it's like $13.5 million per person. So 26 and some change per, married couple, that amount of wealth to pass without, at least being taxed at the federal level, their estate. And that tax is 40% usually for anything above that exemption level. And that exemption is actually set to come back down in 2026 to, I believe, $6 million, per spouse. And so if you're around that $6 million range, we want to start thinking about, okay, should we set up an irrevocable trust of some kind that gets that Bitcoin out of your estate, and it can grow over time. And then when it does pass to heirs, it avoids that 40%, estate tax. Because even if you're 35 years old, you own $5 million worth of Bitcoin, that could be $30-40 million worth by the time, you actually do pass or want to give it to your children, your grandchildren, et cetera. And so a 40% tax, I don't think anybody wants a 40% haircut taken off of their Bitcoin.
No, that's a ridiculously high number.
For sure. Exactly. And so planning ahead for this, is critical right now for high net worth Bitcoiners. So those are the estate planning strategies that you want to look into on the legally passing my Bitcoin side. When you think about the custody structure, our thought process is, okay, we need to look at first, how comfortable are you and your family, with Bitcoin at a technical level, with self-custody. If you have a multi-sig setup, it's not collaborative, you just set up your own multi-sig. Is that going to be easy for your wife to then take over and get access to if something happens? Probably not. And so, if you want a multi-sig setup, thinking about the inheritance piece specifically, collaborative custody could be a good option there to make sure that facilitation happens, of getting the Bitcoin to the people that you want it to get to, making sure they have access, and allowing them to utilize it for whatever they would like. If you have a single sig setup, that's simple, and that may be the best option then. If you're somebody who's privacy focused, you don't want to have your Bitcoin, KYC or tied to an institution. You would rather hold it in self-custody or in cold storage, not have anybody know about it. Well, then maybe we just go the single sig route, add a, passphrase or PIN onto your wallet. And that is a lot easier instructions to be able to give to your wife and kids. So you got to think about the complexity aspects when it comes to the people who are going to be receiving this Bitcoin. Can they access it? Are they comfortable with it? That's really the biggest thing we consider when we're thinking through the estate planning and inheritance piece, when it comes to just making sure they can get possession of the Bitcoin ultimately.
Yeah, I definitely agree. I think the technical barrier with the people you want to inherit your Bitcoin is going to be the biggest challenge, and not overwhelming them. But at the same time, you want to make sure you do have a secure setup. And this kind of trade-off between Bitcoiners optimizing for privacy and then optimizing for other things, I think is really interesting because, well, if you have a bunch of Bitcoin and you have, let's say $50 million worth of Bitcoin, it's going to be pretty hard to spend any of that on anything without in some way compromising your privacy. Like, that's just the nature of it. If you want to go buy a Lamborghini or a $10 million beach house, someone's going to know you have money. And, I think the IRS is going to be pretty curious if you purchase that and you haven't disclosed any Bitcoin holdings. So it's definitely, I understand this inclination towards privacy, but at the same time, KYCing some of your Bitcoin stash to be able to not have the feds knocking on your door, I think is a pretty worthwhile endeavor for a lot of people.
For sure. And honestly, that's where a trusted relationship like ours can come into play with Bitcoiners, specifically, because we get this stuff. And so, we have a prospect right now who he doesn't want to work with Unchained. He doesn't want to work with a bigger institution because privacy is such a big deal. He expects a lot more pushback in the future from the IRS, from the government, whether or not that happens, the kind of now they fight you stage, if you will. He believes that is a real reality that is coming our way. And so instead, he can still achieve this, facilitation of inheritance, but by using us as the collaboration piece. And we now have individual relationships, with his family, with his heirs, so that they know, okay, if something happens to dad or, to mom and dad, we can reach out to Mitch and Jacob, and they know their entire financial situation. They know Bitcoin. They can make sure that we get all this taken care of and we don't have to worry about it, while still maintaining that privacy, because we're not going to be, a large institution like, the ones I mentioned. So having a trusted relationship like that can be beneficial, still giving you the solutions that you want without fully, trusting a big institution.
Right. Well, the word trust has a rotten taste in many Bitcoiners' mouth, but yeah. You make a great point here, because like, if you don't have anybody in your life you can trust to help your family if something happens to you, deal with this with your Bitcoin, like, you're in a pretty precarious situation. So I think really that's kind of the most underrated asset that Bitcoiners have at their disposal, which is just trusted people in their life that can help them in this situation. And they know they're not going to, you're not afraid to disclose how much Bitcoin you have with these people, or maybe even give them a key, right? And know that they're not going to try to run off with the Bitcoin. I think just having trusted people in your life is really beneficial in many different ways, but specifically within this realm of Bitcoin inheritance. Yeah. And something that's unique about your firm is among financial advisors, I think you're probably the only one I know that recommends tithing to your clients. And I want to unpack this a little bit.
Yeah.
What do you why do you recommend this? How receptive are your clients? And then what does tithing actually look like in practice?
Yeah. So for us, our approach, we are believers in Jesus Christ. Not afraid to say it, not afraid to market it, not afraid to talk about it with prospects. And if that really turns them off, okay, they weren't the right clients for us. Why we even bring this up and talk about it in the first place is because of our beliefs, we believe that God loves a cheerful giver, and God blesses those who are willing to be generous to others and not, hoard all of the resources that God has given them. Ultimately, at the end of the day, He is the owner of our resources, and we are just temporary managers and stewards, of those resources. And so if we fully believe that, God will bless the cheerful, generous giver, then why would we not recommend that to our clients? It doesn't necessarily mean that God will bless them financially. It doesn't always mean that. But the best thing that you can have on your life is God's blessing. And so, following His principles that He has laid out for us, if that, we believe that is the way to live the most fulfilled, best life, that we can, we are doing our clients a disservice by not encouraging them to live out those principles as well. And so, there will be people who won't agree with that. And we fully understand that, own that. And, we'll just agree to disagree and not be the right fit. Does that mean we have every client is giving to their local church 10% of their income on a monthly basis? No. It's a conversation that we bring up, we encourage, but at the end of the day, we're not forcing anything on our clients. We'll educate them and give them our recommendations, give them what we believe is best. And that is our duty. But then what they choose to do is up to them. And if they're like, no, I don't want to do that, I'd rather go in this direction. Okay. We'll help them do that. But we've planted the seed and we have expressed, what we believe would be best for their situation. And so, we take a very bold approach, I would say. Most people, they would say they're financial planners that are Christians. We're Christian financial planners. We believe that comes first. And that bleeds into our perspective on the world, our beliefs, and then ultimately what we recommend to clients. And I believe Bitcoiners, early Bitcoiners are already in this position, but Bitcoiners as a whole will have a unique opportunity to be generous and really decide how they will give their resources to certain, organizations that will make this world a better place. I think Bitcoiners have a understanding of how this world operates that most people don't have. And because of that unique worldview, they can actually, affect change more so than the person who's still fiat brained living, walking around eyes wide shut, if you will.
Yeah, that was well said. And I tend to agree. Most Bitcoiners I've met, not all, but most, are of upstanding moral character. So I am excited to kind of see this world where Bitcoiners have accumulated a lot of wealth and then the different avenues in which they choose to give back. I think that's going to be very interesting.
Absolutely. Absolutely. I gave my pastor the other day the book, Thank God for Bitcoin. So we'll see if that works to orange pill him. We're going through those conversations now, but on a local community level, I'm working to orange pill my church and help them accept Bitcoin, as tithes, and help them understand how it can be beneficial. So we'll see. We'll see what happens. I mean, I was talking with another Bitcoiner the other day who was saying that he just found out that his church has been holding millions of dollars in cash for since 2020 to save up for a new church plant, a new building that they're wanting to expand into. And after finding that out, it's heartbreaking, because they believe that they're doing what's best for their congregation, for their people, and I would view that as a lack of stewardship of their resources. And it's just simply that education, not knowing how our financial system works. And they've missed out on, hundreds and hundreds of percent in gains and whatever assets that they wanted to choose, way better in cash. And
Right.
that's could be preventing them from expanding the kingdom. So, I'm trying to do my part on a local level and help, our clients do the same.
Yeah, that's really noble work. And for better or worse, like, I understand where the church comes from with this perspective, but I do find that there's this disdain for money. And I get it, because what does it profit a man to gain the whole world and forfeit his soul? Yeah. But at the same time, I do find it's prudent to understand how money works and like how to optimize. And I think that's something that's lacking within a lot of churches. And I've often seen scripture misquoted where they take the verse out of 1 Timothy that says the love of money is the root of all evil. And it's misquoted as money is the root of all evil. And so there's this really abrasiveness to anything financial. It's like this forbidden topic that just shouldn't be discussed at all. And I think that's totally the wrong approach. And holding millions in cash on the church balance sheet is a prime example of this. Like, a lot more good could have been done had they been prudent and taken the time to study Bitcoin, study financial markets, and figure out a better place to organize that capital.
100%, man. Jesus talked about money more than anything else. So that means that we should be talking about money as well. Jesus was the greatest teacher ever. And so, of course, his parables, maybe they just weren't solely meant to be speaking to money, and they could have many meanings, but he spoke on money specifically because, of how the level of competition, I would say, for our heart that it is coming, after and against God. Doesn't mean it's evil. We just have to be aware of it and keep it in its place in our heart, and we shouldn't avoid it, if you will. But I've had many of those same conversations as well, where people feel like Christians should be poor, which is totally misguided as well. But that's maybe a conversation for a different day.
Yeah, absolutely. But I think you're right. I think the number is like 40% of Jesus's parables use money as some sort of metaphor to articulate a greater point. So clearly, it's something that's deeply ingrained into the psyche and core of each human is this understanding of money. And so the fact that Jesus uses that as the base for a lot of his teachings, I think, is very telling. I want to pivot the end of this conversation here to more of a near-term view. So the Fed just started cutting rates. They cut by 50 basis points, I think it's about 2 weeks ago now. And you and I were both in the same boat where we thought it was going to be a 25 basis point cut, and they ended up doing 50. Do you think this fact that Powell did 50, does that concern you at all? Do you think we're headed towards a recession and maybe Powell's just trying to get out in front of it with a larger cut?
It could be. We take a long-term approach with everything that we do. I think that they did a 50 basis point cut could be a bad sign for stocks in the short term. But as we know, after 6 months to a year of time, the global liquidity will kick in and they won't let things collapse. I think a big differentiation that a lot of people, at least outside of the finance world, haven't made is asset markets really aren't a sign of the economy because of the QE world that we live in. When they decided to start pumping new money into the system, a lot of that new liquidity goes into assets, and so even though poverty is increasing, we have more people who can't afford $1,000 bill or whatever, they have more credit card debt than ever. That is a subsection of the population that is being essentially oppressed, if you will, by our financial system, and so their costs are going up and their economy looks really bad. But then we look at the wealthy side of society and they benefit significantly from this propping up of asset markets. And so I think it could spell a negativity in the short term for stocks, but as we know, in the long term they'll print to prop it up. And so we just need to make sure that we take advantage of any downturns in the short term so that when things do start to take back off, our wealth is outgrowing monetary inflation, because at the end of the day, the last numbers that I saw, I think were global liquidity has increased by like 12, or global money supply has increased by like 12.7% per year since like the 70s. And then the US money supply has increased by like 9% per year, something like that. And so, you can't afford to sit on the sidelines and worry about a short-term market crash, recession, all of this stuff. You need to make sure that you own appreciating assets. They're going to benefit from the money printer when it turns on, and we've seen it now, it's turning on. So whether or not that happens, comes to fruition in the next 6 months to a year, I'm not so worried about it. We'll get an opportunity to stack cheap sats. If Bitcoin's affected by it, who knows if it will be or not. But yeah, I don't so worry about what's going to happen in the short term.
Yeah, I think that's the right approach to take. And recession, obviously, big scary word or whatever, but recession is bullish for assets because we know they're going to expand the money supply in response. That's what they've always done. That's what they're going to keep doing. And the degree to which they do that is going to continue to grow. And I think a really interesting and unfortunate dynamic of inflation is that the actual quality of life of humans can be going down, but the quantifiable metrics we measure the health of the economy can be going up, right? Because as the stock market can be going up because the currency is losing value, but that doesn't mean the economy is in a good spot, right? People, like you said, they're in credit card debt, working multiple jobs, living paycheck to paycheck. Like, unemployment rate can be low. Well, perhaps they're working multiple jobs, barely able to get by, right? The stock market's high, but that doesn't necessarily mean the economy is doing well. GDP could be rising, but again, it's just the actual dollar, the unit we're measuring the economic health is losing value. We see this a lot with the semantic games that the Biden administration plays when it comes to inflation. They say inflation is going down. Technically, yes, they're right, but prices are going up. Yeah. So maybe the inflation's 2.7% CPI this past month versus it was 2.9%. Well, goods still got 2.7% cheaper. So they could say inflation's going down, make it seem like things are great, but prices are still going up. The actual everyday person is still in a much worse economic position. So I think that one of the just most destructive things about inflation is that it kind of masks the actual data and really manipulates, and they can almost psyop people and gaslight them into thinking the economy is doing well when it's anybody who's actually living, working a blue collar job, lower income, they can feel that it's not the case.
100%, man. I mean, it's totally misguided to look at CPI and judge inflation based off of that, I believe. By definition, CPI is an aggregate of price inflation over, the entire US, and a specific basket of goods that is ultimately chosen by the government. So they're going to manipulate what's
Right.
included in the basket of goods, and they're going to manipulate the CPI numbers to make sure it tells the story that they want to tell, that they can cover up the monetary inflation that's happening on the back end. So that's really, we could go into that even if you wanted, of, fiat financial advisors using CPI as kind of their hurdle rate for retirement planning. Whereas, you really need to use the hurdle rate of the monetary inflation to understand if your client's wealth is actually growing or not. And so I think it's going to cause a bunch of issues in 20, 30 years for people who may be retiring soon, or, even people who are, currently accumulating assets for a hopeful future retirement, to view inflation that way, because it's totally manipulated. It's a scam. And I wish more people were aware of that, for sure.
Yeah, that's a great point. I hadn't really thought too much about that, but fiat financial advisors, yeah, okay, we're going to quote unquote adjust for inflation, but they're using CPI, which we know it is super flawed because of the actual goods that are in that basket are constantly changing. So yeah, I mean, I could foresee a lot of sort of baby boomers, Gen Xers getting burned over the next couple decades, where they thought their retirement plan was good. Oh yeah, it was adjusted for inflation. How did this happen? And then they're totally just burned in real terms. It's going to be very sad to see, but I'm sure it's going to happen.
100%. And I believe a point you wanted to get to on this, and I'll just go into it, is, I tweeted recently that most financial advisors are overweight bonds for a long, term retirement. And it is sad to see because of this exactly. They think, oh, my financial advisor prepared me for inflation, but that financial advisor just doesn't understand our financial system. I mean, our money supply grows exponentially by definition. And so what does that mean? The rate at which the money supply is growing continues to get faster and faster. It's compounding on itself. And so that means if monetary inflation causes price inflation, inflation is going to continue to rise over time, and get faster and faster. And so we're going to see much higher inflation into the future than we have seen even in the past, because of that. And so if you're using CPI, a completely manipulated metric, as your hurdle rate for clients' wealth, well, the outcomes that they're going to achieve are going to be way off, because their personal price inflation is not CPI. Even if we just say, let's say CPI is true for maybe somebody living in, Kansas, who has a low, cost of living, and maybe CPI is accurate for them. Most people who are working with financial advisors aren't living in Kansas, living a low cost of living lifestyle, buying the cheapest goods, lowest quality food, whatever it may be, that is factored into CPI. So their personal price inflation is going to be much higher than CPI because they're living in a high cost of living area. They have significant wealth. They're spending on things that, the highest quality food or the more valuable items that they want to spend on. And it's just going to cause big issues, over a 10, 20, 30 year time frame. I mean, this whole QE world that we live in really just started in 2008. So most financial planners or financial advisors will say this time isn't different, but when you just look at how our system operates, it is different, and it will be different into the future because of that.
Yeah. I think probably the most egregious area where we're going to see fiat financial advisors fail is through the state pensions, right? A lot of people, public workers, police officers, teachers, firefighters, etc., they feel super confident because, well, maybe their father and grandfather retired off the pension and they've done great, right? But like you said, everything sort of changed after 2008, and I've really empathize with people that are dependent on these government run funds to manage their retirement and secure their wealth into the future. I mean, it's bad enough if you have just a fiat financial advisor, but I know some of these pensions are just horribly mismanaged. I'm in North Carolina, and a couple of years ago, they basically aped into long duration bonds when rates were at less than 1%, just egregious mismanagement of funds. So I definitely, if you're listening to this and you're dependent on a public pension, for retirement, I would definitely recommend sort of either reaching out to you, Mitch, or just start studying Bitcoin. You got to do something else because you definitely don't want to be relying on the state for your retirement. But with that, we do have to start wrapping up here. Where can we send the audience to learn more about what you're doing and keep up with you and Strong Wealth Advisors?
Absolutely. So our website is strongwealth.net. You can learn more just about what we do for clients, the services that we offer, and learn more about our company there. Or if you want to follow me on socials, I'm at Mitch D. Moore on Twitter. Well, I call it Twitter still. I probably will always call it Twitter, at Twitter or on Twitter and on Instagram at Mitch D. Moore.